easily 80% of the work you do for clients will revolve around retirement planning. And at the end of the day, retirement planning is all about cash flow. The definition of retirement is getting to the point in your life where the income you get from your job no longer matters to you. You can live the life you want to live without the income from your job. So you need cash flow. You have to be able to get enough cash flow to live the lifestyle you're trying to achieve. Cash flow in retirement is really the art of what we create for clients as financial planners when dealing with retirement planning. The first thing you need to be able to do is very clearly talk about how cash flow is generated. Oftentimes, the clients you're going to meet with will have the vast majority of their retirement money in pre-tax buckets, usually a 401k, traditional IRA, etc. Now, Roth IRAs are certainly more and more common, and because Roths have now been around for a little while, you will run into clients who have higher Roth balances than we may have run into 10 or 15 years ago. But still, traditional IRA, pre-tax money, is still going to be the dominating type of money that you're going to run into. Even something as simple as figuring out net income versus gross income when taking taxes into account is oftentimes very challenging for clients. And even if this is your first time seeing this, it's probably going to be a little bit challenging for you to work with taxes in terms of net money. Let me show you what I mean by this. Let's say, for example, a client called you up and said, hey, I want $2,000 from my IRA. Well, $2,000 net is what they're asking for. They want $2,000 net income. Now let's assume that they're in the 25% tax bracket just to make the math easy. So they want $2,000 after 25% in taxes. Well, most people would say, well, just send me $2,500 minus 25%, because of course 25% and $2,000 is $500. 25% of $2,000 is $500, so they figure the gross is $2,500. It doesn't quite work that way, because if you took $2,500 and subtracted 25%, you would only net $1,875, which isn't what they need. So you always need to know that you need to back the tax off of the net. You need to gross it up. Most people will say, if you take another example, let's say they want $1,000 and they want 10% withholding. In the client's mind, they're thinking that $1,100 is the gross number. It doesn't work that way. You need to gross it up, and I'll show you how to do this. So let's go back to this original example. Someone wants $2,000 net. There's going to be some sort of gross number up here minus 25% taxes that they're ultimately going to need to gross. To get from this number to this number, you need to divide by the inverse of this. Now again, that sounds complicated. I'm going to explain it in a second. To go from here to here, the inverse of 25% is 75%. It's what's left over from 100%. So to go from here to here, you take $2,000 divided by 0.75. Which equals $2,666.67. The gross number to net $2,000 after 25% is $2,666. Okay? For a lot of people, that's kind of an aha moment. They don't think of needing to gross this in order to net this. Just like over here in this more simple example, when someone asks for $1,000 with 10% withholding, they're automatically assuming $1,100. Well, if you took $1,100 times 0.9, which means they're keeping 90%, so 10% went to taxes, 1,100 times 0.9 is $990. So they're $10 short of what they want. So same type of scenario that we did up here. There's a number that they want to gross minus 10% to net 1,000. In order to figure out what this top number needs to be, the inverse of this is 90%, 0.9. So you take 1,000 divided by 0.9, which is $1,111.11. This number minus 10% nets $1,000. So to go from here to here, we multiplied by 0.9, didn't get us where we needed to go. That's how most people think of the money. You need to divide by the inverse of this, which in this case is 0.1, and that's how you end up with what the gross number needs to be. Now, I know that this video, when you see it for the first time and you start kind of practicing this on your own, it's going to seem a little complicated. You're going to have to kind of overthink it a little bit. It gets harder when a client needs, let's say, $3,760 per month, and they want 20% taxes withheld. You have to simply take the inverse, which is 0.8, take this divided by 0.8, 3,760 divided by 0.8, they need to gross $4,700 to net that. Okay, so the odder the number gets, the harder it is to do in your head. But when you can do that calculation quickly in front of a client, and within a second tell them exactly what they need to gross, most clients don't know how to do that. You may not have known how to do that before watching this video. If this seems a little complicated to you, that's a good thing, because that's part of the value you're going to bring to the table as a financial advisor, is being able to clearly articulate what they need to gross to get to where they're going to net. Take some time to practice this on your own before you see the next section. We're going to take cash flow to a whole different level using the same math concepts, but we're going to bring something to life for a client so that you can see how all this starts to fit together. So for now, just practice making up a net number, make up the taxes, and just practice dividing by the inverse. It almost needs to become muscle memory on your calculator.